Hey guys, this is life insurance explained very quickly, all right? In the life insurance world, there's two kinds of life insurance. There's term life insurance, there's whole life insurance. Just to break this down really quickly for you, number one, when you buy a whole life insurance policy, you have that for your entire life, right? You own it. Never goes away, you own it forever, doesn't ever disappear. Also on these whole life insurance policies, you can get cash accumulation. So you pay monthly, and over time it accumulates cash surrender value where you can actually take cash out and still keep your whole life insurance policy. So imagine it like this. A whole life policy is like buying a home, right? Once it's paid for, you own it forever, can't be taken away from you, and you get the equity in that house, which is similar to like the cash accumulation in a whole life insurance policy. The one thing about a whole life insurance policy is oftentimes it's a higher monthly amount that you pay in, right? So it seems more expensive, but the reality is it's an investment because you own it and you get cash accumulation. Now there's a less expensive option, which is a term life insurance policy. It's kind of like renting a house, right? You don't own it, so if you do it for a 10-year, a 20-year, or a 30-year term, it disappears after those 10, 20, or 30 years, right? So you could say, well, your monthly payment is wasted. Well, here's the thing. For that period of time, you had a life benefit, kind of like if you're renting a house, you may pay $1,200 a month, and you have a house, a roof over your head during that time while you're paying for it. So while you're paying for the term, it's covered. It's like renting a house. There's no cash accumulation, but the benefit of this is there's a lower monthly rate. So you can get more coverage for a lower monthly amount, right? So you have whole life and term. Those are basically the two simple ideas when it comes to life insurance.